Well, let's focus on the pharma space. And Torrent Pharma, they acquired Curator Healthcare for a sum of around 2,000 crores odd. Now, remember, the company is expected to scale up those sales to around 275 crores odd. That would mean a growth of close to around 20%. Well, to understand more on that front, we're joined by Mr. Aman Mehta, the director at Torrent Pharma. Hi, Mr. Mehta. Thanks so much for joining in. Well, you're guiding for a good growth on that front. The street believes that this acquisition has come at expensive valuations. My question to you is, given that you're optimistic on growth, when do you see this sales number hit, say, 500 crores? Do you think by FY26 you can go to that level of around 450, 500 crores odd? That would make the deal far more attractive.
Yes, we do believe that something around the 500 crore range should be doable within a 4-year period and certainly a 5-year period. We think that the asset has potential to grow at high double digits as it has been in the last couple of years. So when we look at it from a 3-year, 5-year horizon, we feel that it does make good sense for us, and there is a long-term potential in this therapy area as well, and hence the rationale behind the acquisition.
We do want to ask you about what the long-term potential is, and to be fair, all of us are parents here, so I'm sure at some point in time we would either have used the products or will use these products, right? But I want to understand, Aman, the debt situation. How did you fund this acquisition, and post that, how much will your debt rise to?
So the enterprise value is 1885 crores for the deal. Good part of that will be debt funded, and some part of it will be internal accruals, as we guided on the investor call last week.
Okay. Right. No, I didn't get that. So what is the total debt post the acquisition and the repayment?
We'll share the exact numbers at the end of the quarter, but okay, somewhere close to 1885 is the enterprise value, so wouldn't be too far off from that number.
Aman, we're trying to understand the debt that you're taking. Say, what would the peak debt level be? If you could work on that front. You have around 3,000 crores, I understand. Majority of this is going to be funded via debt. So do you see the debt peaking out around 4,500 crores? And in terms of a longer term duration, do you think by FY25 odd, you see that debt number come down, say, to around 1,500 crores or 2,000 crores peak debt? And by FY25, what it looks like? Go ahead.
Yes, that's right. Between 4,500 to 5,000 crore is appropriate to consider right now. And given that most of our cash flows in the recent quarters and year has gone back in debt repayment, we think that trend should continue. And by FY25, we should certainly be at a comfortable level in terms of net debt.
Okay. Aman, hi, this is Ekta. I just wanted to ask you about your larger term strategy when it comes to the domestic pharmaceutical space. This would be probably your third acquisition in the past decade. Before this was Elder Pharma, Unichem, and now Curatio. Tell us, 60% of your sales now come from India. What is your strategy when it comes to India? How big do you want it to go? And any more in terms of a pipeline we could expect when it comes to M&A?
So India right now is growing fairly in a healthy way. I think if the market is growing at about 10%, we believe we should sustain a growth which is 3 to 4% higher than that. Now, assuming that IPM remains at that level, our growth visibility remains similar over the near term. I would say at least next couple of years. So rather than a kind of target, we believe that growing ahead of the market in this kind of range is something that we feel is sustainable. And in terms of future M&A pipeline, I think obviously we do have a lot to focus on at this moment in terms of Curatio. So while we still believe that inorganic is an important pursuit for us, we would like to focus first, at least in the near term, on integrating this particular asset.
Okay. Aman, I wanted to shift focus away from Curatio and ask you about the Indrad facility as well as the Dahej plant. Indrad just got inspected by the US FDA. I think you got 3 to 4 observations. Tell us how optimistic you are about probably clearing the warning letter there.
We have received 3 observations. None of them are related to data integrity. We have to submit our response within the next 15 days. And hopefully within the next 90-day period, we should hear back. And we remain optimistic on the resolution. And post the resolution, we should hopefully be able to launch some of the pending ANDAs from the last almost 2 to 3 years now. So we do remain optimistic for the US market as well.
And what about the Dahej facility? What is the timeline of re-inspection by the US FDA? And is it already getting inspected?
No visibility on the Dahej yet, but we expect that should be any time in the next couple of months, given the trend of inspections that's been going around.
Can you help us also with the growth strategy of the company? I understand that you're planning to expand into several geographies, north, east, etc. What are the kind of product launches that you have, and what are you targeting in terms of growth?
So in terms of the existing Curatio business, it's more skewed towards the south and west, and north and east currently has a smaller contribution. Our existing Torrent business does have a strong east presence in dermatology and also in the north. So we believe that there are cross-selling synergy potential. There is cross-selling synergy potential, which would start playing out over time. It wouldn't happen immediately, but over the next couple of quarters, 1-2 years is the kind of horizon, and particularly because we have seen that play out in some of the earlier deals. So that's how we're looking at the growth potential here.
Okay, all right, Aman, you're talking about some synergy benefits, cross-selling benefits as well. So in the next couple of years, this will play out. Now for Torrent, you're doing around 30% margins, and for the acquired assets, at Curatio, you're looking at taking it to around 29%. On a blended basis, what kind of margin improvement can we see from year on, from around this 30% odd mark? And also you said you look at reducing debt, but you didn't give us a number. So by FY25, what does it come down to, from around 4,500 crores?
So I think in terms of synergy, margins, we believe that the company level margins should not be impacted in the near term, even after this deal, because the acquired business margins are on par or just slightly higher than the current company level margins. Our India-based business margins are higher than the company level. So our goal is to bring it up to the India business margins in the next couple of years. So that would be a 1-2 year period till that potential is reached. I think, and in terms of debt, by FY25, we should be down to about roughly maybe 2,500 crore of debt.
Okay, all right. So you'll probably come down to 2,500 crores of debt by FY25. That's something that you guided investors as well post the Curatio deal. Aman, just one quick last question, and this is not related to Curatio. This is not related to the US FDA. This morning, we are dealing with very negative news when it's come to a private New Delhi-based pharmaceutical company, which has been responsible for over 60 deaths, could be responsible for over 60 deaths in Gambia for contamination due to DEG. And you get 60% of sales from India. Tell us your thoughts and, where exactly have we gone wrong?
No, but it's hard to comment at this stage. It's very fresh news. So, not really sure on what has gone wrong here. But obviously, the Indian pharma industry has put in, tremendous emphasis on quality year and year again. And same applies for Torrent as well. So while we remain absolutely confident on quality assurance measures at Torrent, hard to really comment on what has gone wrong in this particular case.
All right, Aman, we'll leave it at that. Thanks a lot for joining us. Very unfortunate incident over there, but thanks for commenting and telling us a little bit more about your business as well. That's Torrent Pharma, but don't lose sight of the market, folks. 114 points higher now on the Nifty. The Bank Nifty is soaring away, up almost about 270 points. And across the board, it seems to be a secular run on the upside. There's IT, there's auto, there are banks, financials, and the mid-cap index. So it's kind of like opening up in the broader markets as well in terms of gains.
6-1, Sonia, in terms of advances to decline. So it's looking pretty solid, all in all, have to say. Z is still, of course, up 5%, 280. There is Mazgaon Dock. Mazgaon was not there. When we were talking about the top volume-led gainers, but look at that, 7% on Mazgaon Docks, 595 coming up. So that's some serious price action. And it's kind of started picking up post at about 9:40, 45. In the last 10 minutes, basically, this move has come through. Anything else which was not... Max Ventures is another one. It was up 3%. It's up 6%. So just pointing out changes, incremental changes. HEG and Graphite India, the other two names, which are up 8 and 5.5% respectively. So those are also new additions to the broader market list that we've been kind of pointing to. So there's a fair bit happening, isn't there? Rahul Sharma is joining us now, Head of Technicals and Derivatives Research at JM Financial Services, to chart the trends near, medium and longer term for us. Rahul, great to have you with us here on CNBC TV18. Thank you very much. How are things looking, Rahul? What is the primary trend now? Is it higher? Is it a little muddied now? Just kind of sort of, let's start there.
Hi, Prashant. Looking at the recovery that was seen on the repo rate cut on Friday and Tuesday's one, is clearly suggesting that the internal breadth of the market has improved significantly. Around 56% of the Nifty components have shown big reversals, indicating that there is more legs to this upside that we've seen. Yes, a bit of a final leg of volatility may be there in the US markets, which could, keep us range bound for a bit. But I think this is a classic buy on dip market where market internals like Nifty has remained resilient throughout. And now finally with the US markets bottoming out, there is a good possibility that, we go on to test the all-time high on the Nifty, which is around 18,600. So I think the technical health of the market is pretty robust as of now. And, any dips could be used as buying opportunities. 17,000 should be a good re-entry level in case there is any correction in the near term. And overall, I think as long as we remain above the 16,640, which is the 50% retracement of the entire previous bull move from 15,200 to 18,000 odd, I think we should be, pretty strong in the uptrend. So the bias is positive. We're just heading into a small bit of resistance around 17,450, 17,500. So for this week, I think we should be done around that level. Post that, a bit of a cooling off or a pullback can be seen, post which, we can expect another leg of rally to happen.
Cooling off to what kind of levels, Rahul?
Sorry, could not get you.
Rahul, cooling off to what levels? You said at about 17,450, maybe a bit of a profit booking and then a bit of a cool off. Cool off to what, you think?
Yeah, so cooling off could be around 250, 300 points on the Nifty. Somewhere around 17,200 is where we are looking, the cool off should happen, which should be again be a good re-entry point, a bit of re-entry at 7,200, and at max, if, global scenario gets stretched, around 1,700 should be a good level to enter longs.
Okay, so you're saying that this is a buy on dips market and, the technical setup is looking quite positive. Rahul, good morning. Tell us about which are the leaders that could take the markets ahead in the next leg of this rally, stock-wise?
Yeah, so one index which clearly stands out, like a Tollywood movie. I mean, there is a villain, phase where the index struggles a bit, and finally the leadership is back. Before the movie ends. I'm speaking of the Bank Nifty index. So this is the first index to reach the 50 DMA. The recovery has been quite robust, and so far in the last 3 odd sessions, where the recovery that we've seen is primarily on short covering. I think the fresh long addition is still yet to come. Banks are here to stay. I think the banking and financial space is one area which should continue to lead the rally. Apart from that, auto is one area where we feel that there is significant upside which can be had in this month. So talking of stocks, Bajaj Finance remains our top pick from the NBFC basket. ICICI Bank from the banking space, and from the auto basket, I think Maruti, the risk reward is pretty favorable for a 10% upside from current levels. So these are our top ideas. We believe overall the market should do well in the short to medium term, and October we are expecting the bias to remain positive, especially for the broader market.
Okay, all right. Hi Rahul, morning. You spoke about a movie and you talk about the heroes as well, but there's been a villain in there. That's the IT index. It's been a big underperformer. Do you see signs that that's going to be bottoming out? Would you go for a contra trade out there, or do you think there is still some correction left in it?
Yeah, Nigel. So the correction that we had, in the IT index has taken out the froth from the outperformance. So 2020 was a year where IT did extremely well, and the outperformance was there for everyone to see. Now that the outperformance has been taken out, we believe that the risk reward is pretty much favorable for a rebound in IT index as well. In fact, the last couple of weeks, the pattern that has been formed in IT index is suggesting that 26,000 is a very, very solid base for the IT index. and we should be looking for an immediate target of anywhere around 29,500 to 30,000. So IT as a sector, the risk reward is very favorable. It may be a slightly longer road to recovery, but we believe that the worst has been done for the IT index, and this has been the only major sector in the Nifty 50 basket which has been an underperformer. So that also is turning from neutral a few weeks back to positive once again. So that all in all, good signs. Like 90% of the Nifty components are into a bullish territory, and that should bode well for a possible new all-time high in this month itself.
What other pockets of the market, Rahul? I mean, Mazgaon Dock is, incredible move. 26th of September, Mazgaon Dock was at $300, at 600 today. Just what a move it's seeing today and over the last just a few trading sessions, basically, six sessions in all, 300 to almost 600. Rahul, defense, right? Has been a huge outperformer this year so far. Your thoughts? If you still think they can do more from here, and which ones?
Yes, Prashant. So defense has been one of our favorite sectors, and two stocks which stand out clearly. One is Hindustan Aeronautics, and the other one is Bharat Dynamics. I think these stocks, still have around 15-20% upside left in these current setups, and we could very well see those happening in the next couple of months. So, Bharat Dynamics possibly a 1,000 rupee target, 1,050 target on the upside. HAL, I think, is another one which is there in the F&O space as well. So, this could very well head towards the 2,700, 2,750 mark. So, both. In fact, the sector is looking pretty solid. The charts are pretty robust, and the retracements that we've seen in the current correction, they hardly managed to break their 50-day moving averages, whereas the broader index was well below that. So this goes to show the inherent strength that is there in these underlying counters, and we believe that on this way up, we should be seeing good traction on the upside. So we remain bullish on both of them, Bharat Dynamics and Hindustan Aeronautics.
So you did mention a while back, Rahul, that you are bullish on the auto space, but it's been very different, the moves here, right? So this year, for example, Tata Motors is down about 20%, while Maruti is up 18%. Going forward, which are the outperformers and which are the stocks that could perhaps take a backseat?
Yes, so Maruti is something that we like, especially given the domestic exposure of the business and overall the domestic economy doing very well. Tata Motors has had headwinds regarding the issues with China and Europe, so obviously that would be one area where we'll be keenly watching on what the developments are. But as far as I think Maruti is concerned, like I shared, the risk rewards are pretty still trading around its 50-day moving average. Technical setup is suggesting that this stock could very well be headed for the 10,000 mark. So in the next couple of months, we'll not be surprised that the auto, which is actually having the time of its life, continues to do so, and the domestic players should benefit from that. Have a stop loss placed at around 5-6% from current levels. There's about 20% upside that can be had in something like a Maruti from current levels.
Okay, all right, Rahul. Thanks so much for stopping by and filling us in with your views. As you said, there's a bit of a buy on dips that's playing out, and that appears to be happening as well. A quick word on the index then. Today's day's high is around 17,429. We hit that level, we corrected close to 90 points. That initial dip has got bought into, so keep a marker out at 17,430. Once we get past that and can trade above that, maybe we'll see some bit of short covering, which then we run into that resistance zone of around 17,500 odds. So limit to a short break. You come back, we'll turn our attention to the commodity markets. Manisha is waiting for us out there.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Electronics Mart India Limited, one of the fastest growing consumer durable and electronics retailers in India, launches an initial public offer of equity shares of rupees 10 each. The 100% book build issue is being offered in the price band of rupees 56 to rupees 59 per equity share. Bid issue opens on Tuesday, October 4th, 2022 and closes on Friday, October 7th, 2022. For risk factors and more details, refer to the RHP available on the website of SEBI, the book running lead managers and the stock exchanges.
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
Why invest in just one when you can invest in all? Presenting ICICI Prudential Nifty Auto Index Fund, a scheme that is designed to capture the growth of the automobile segment during this festive season. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Happiness is getting home solid wood furniture this Diwali from insaraf.com, India's #1 solid wood furniture store.
कभी दीवार पर निखर आती है सपनों की सौगात और कभी बेडरूम के कोने में ही हो जाती है नए बिजनेस की शुरुआत। कभी किचन से आती खुशबू से ही भर जाता है पेट और दिल और कभी दरवाजे से आती दिखती है ढेर सारी खुशियां। आपका घर है आपकी अमानत और आपके घर की खुशियां हम रखेंगे सलामत। SBI होम लोन्स।
Well, the markets are up, but one stock that's buzzing around is Persistent Systems. It's up about 6% Nimesh is here to tell us why. Nimesh, over to you.
Hi, Sonia. Yes, a big reaction to Persistent on the back of a JP Morgan upgrade. They've upgraded the stock to overweight now from neutral, and they've sharply raised the target price to 4,100 versus the earlier target price of 3,900. In fact, Persistent is now the only stock for JP Morgan in the ER&D coverage to have an overweight stance. The four key drivers on why they have upgraded the stock. One, Persistent has a relatively defensive portfolio with exposures to likes of software technologies, BFSI, and medical clients, which are relatively more resilient. That's the first reason. Second, they have the highest exposure to the US-based clients, and there, they expect the tech spends to be much higher compared to the European clients. So that's the second one. Third, they believe, and they actually, Persistent derives highest revenues in dollar terms, and dollar has strengthened versus the INR. And fourth, they expect Persistent to clock the highest CAGR of 25% over the next 3 years. Compared to that, in terms of valuations, it is still cheaper compared to the likes of LTI, L&T Technologies, and in par with Mindtree, despite the fact that they're going to Persistent is going to have the highest growth. Even in terms of valuations at 26 times for 1 year forward earnings, JP Morgan believes that it's an attractive entry point and hence a big upgrade. And basically on back of that upgrade, the stock is up 6% in today's trade. Okay, thanks a lot for that. Well, the other big mover right now is Bharat Forge. It's up 9% on the back of record high Class 8 truck orders in North America. So just to give you the data, Class 8 truck orders in North America hit 56,500, which is a growth of 102% year-on-year and 164% month-on-month. And the graph will also be up on your screen. After doing an average of around 15 to 20,000 for the last many months, finally in September, the average has jumped up all the way to 56,500 units. Now, what explains this big rise? ACT Research, which collects all this data, has said that OEMs have now fully opened their order books for 2023 a bit earlier than expected. Generally, May to September is a lull period, and from October is when the order booking starts. But this time it happened earlier than normal. And ACT Research has said that the Class 8 orders are sensational, no matter how you slice the data. Over the past 12 months, 249,000 Class 8 orders have been booked. Now, the companies in focus, of course, Bharat Forge, Ramkrishna Forging and GNA Axle. Bharat Forge gets a small portion, about 12% of their business. Ramkrishna Forging's 10% and GNA Axles as well has an exposure to the North American truck market. I mean, talks to the strength of the North American market as well. That's the bigger point. I mean, from this one data point, stock specific, but also I think talks about the fact that, except maybe housing in the US, as we've been discussing, the US economy seems to be just fine. Maybe slowing expectations, etc. But as things stand right now, not too much by way of problems. So then, I mean, you can draw conclusions from that, because the market is trying to. Godrej Consumer is the other one. It's losing in trade. The company reported pre-quarterly, second quarter update. Mangalam is here with more. Mangalam.
Well, that's correct. So Godrej Consumer is losing in trade, understandably, because of its second quarter update that the company has reported. And a few things really stand out from a company standpoint. In the quarter itself, the company at a consolidated level has reported a mid-single-digit sales growth, and that would mean around a little higher than mid-single-digit sales growth. That would mean around 6 to 7 odd %. But that accounts for not much as far as the profitability is concerned, because they are saying that the EBITDA may actually decline by almost mid-teens, close to around 14 to 15%. Is what the street is penciling in this time, and this is on account of two factors. One, high cost inventory that the company was sitting on, and secondly, upfront marketing investments that they've been making. As far as the India business is concerned, they're likely to see a high single-digit growth, but then again, that won't be volume-backed because of higher raw material prices. They had increased the prices in soaps, and that has had an impact on their volumes, because the India volumes would actually decline in mid-single digits as well. Indonesia has been a bit of a problem for the company for the last many quarters, and that may continue this time around as well. Early double-digit constant currency sales decline. The only bright spot for them is the Africa as well as the Latin American business. For Africa, they are expecting to see almost low teens sort of growth this time around. That would mean the 9th quarter of double-digit growth. However, from an industry standpoint, three things stand out. The company says that the industry remains soft in the second quarter. Secondly, rural market witnessed slower growth compared to urban. And finally, they expect consumption to improve in the second half of this year. From the first quarter itself, everyone was talking about how there would be recovery in the second half, but they had to contend with the second quarter, and the second quarter, understandably, not looking too good. So to that extent, today's low on the stock will be crucial to watch.
Okay, just look at the stock go. It's now down almost 6%. Well, let's do one thing. Let's talk about the world of commodities. Thanks, Mangalam, for joining in. By the way, oil has been extending its gains after the OPEC Plus agreed to slash crude output. Brent is now at almost $94 a barrel. But Manisha Gupta, our commodities expert, is here. Manisha, what's the one commodity you're looking at today?
I'm looking at crude oil prices because, it's been just 4 days of the week and we've seen 10% of gains come in for the crude oil prices. We've actually come back all the way from $81 off a low to nearly 93.5 on your screens. And the one reason that the prices have been rising is the OPEC and allies meeting. And ahead of that, markets were factoring in this kind of an output cut. But 2 million barrels clearly is on the absolute higher side of the range, which is 2% of the global supply as well. So we will see these cuts start coming in the month of November itself. The next time that the OPEC holds a meeting now will be on 4th of December, and that is when they will assess the international situation at that time there. Well, apart from that, this is clearly the biggest output cut that OPEC and allies have done since the COVID numbers there. The major reversal, especially since we did see 10 million barrels per day of a cut in early 2020. That's exactly when COVID had just about hit. So as the demand started to come back, OPEC has been giving crude oil back into the markets. But now, as they see the prices decline from $123 to nearly $78 on the lower side, is the reason that they have taken this step. The markets will also watch out for Russia output cuts as well. Russia has been saying that if European Union joins in with G7, with US, to put a cap on price for Russia oil from 5th of December, then Russia itself will start, cutting output, and that could be adding premium to prices as well. Also supporting is the fact that the US inventories have declined for a second straight day, and we are now at 429.2 million barrels per day for them as well. Well, the OPEC and allies did cut 1 lakh barrels per day in the month of August, but 2 million barrels is clearly a way more jump from those levels. Also, when you look at the OPEC and allies production itself, they missed target by 2.9 million barrels per day in the month of July. The global markets already are looking at a deficit of 0.6 million barrels per day. So with 0.6 plus 2.9 plus 2 million, another additional cut that we are seeing, we are looking at a lot of supply cut coming into the market to the tune of 4 to 4.5 million barrels per day. And if you see a demand coming back, then you could be looking at higher prices in case of crude from here as well. US clearly has reacted, saying that they will consult Congress on reducing the cartel control that OPEC has on the international crude prices. And they will also look at antitrust lawsuits that can be put on OPEC. So this is something that the markets will keep an eye on. Also, what the markets will keep an eye on is the US non-farm payroll data on Friday. That could really move the markets.
All right, Manisha, thank you very much for that. So we keep an eye out on oil, which of course is the one big risk if it continues to inch up, inch higher in bursts for a big importer like India. 134 points in the Nifty. We are at 17,400. So not very much after that initial surge from the opening levels. What we'll do is we'll take a quick commercial break here. We'll come back, and our special segment, it's the economy. Lata will get chatting with Vijay Kumar of NCC and Rajeshwar Burla of ICRA to discuss the key trends in the road sector. The sector is witnessing multiple upgrades so far in the first half of FY23. Stay tuned for that conversation.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं, पर उम्दापन की नई ऊंचाइयों को छूना चाहता हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस। ये प्राइस ही नहीं, सरप्राइज है। विजिट olxautos.in।
रास्ता तो खत्म हो गया।
तो क्या काम तो खत्म नहीं हुआ ना? 10 बजे तक दूध पहुंचाना है। दूध खराब हो गया तो दिन खराब हो जाएगा।
टाटा योद्धा 2.0, जहां जमीन है वहां रास्ते हैं।
Well, let's turn to, in the economy, a very important sector, roads. Rating agencies told us earlier this week that the road sector has seen a large number of upgrades in the half-year ended September 30. Rating agency ICRA in particular said the sector saw 15 upgrades in FY22 versus only 6 downgrades, that's last year. And in FY23 too, the number of upgrades is going much stronger than downgrades. And this is due to fast growth of traffic and growth in tolls. Look at the numbers coming up for you. For new projects, the expected toll increase is 14.5%. To discuss the prospects of the sector, I have with me two experts, Vijay Kumar, the head and VP Finance at NCC, the big road construction company, and Rajeshwar Burla, the group head corporate and infrastructure ratings at ICRA. Many of the numbers I quoted are Rajeshwar's numbers. Good morning, Mr. Vijay Kumar and Rajeshwar. Thank you very much for joining me. Mr. Vijay Kumar, I first want to ask you about the extent of awards. One of the points that Rajeshwar mentions is that awards have not been very good in the first half. What's your take?
Yeah, that is true. In fact, the global uncertainties and the kind of price escalation that has been a concern for the industry. What typically has happened is a portion of, if you observe a portion of industry, they have postponed the project execution also. That is essentially because they want to wait and watch and see if the prices are falling, and then they can go ahead with the procurement. So typically why this happens is if your contracts are not having adequate pass-through clauses, and if your contracts are aggressively bid price contracts, then you will have to, wait, and you will have to get into wait and watch situation. This is largely because because of this is the sideline flip of the competition what we are seeing in the sector now.
And, one minute. Mr. Vijay Kumar, 1 minute. What you're saying is that prices are very high and competitive intensity is high, and that is why the first half was not very rewarding?
Exactly. The prices went
Okay, I'll just get back to you,
Fundamental.
Mr. Vijay Kumar. I'll just get back to you. I think we have an audio issue. Rajeshwar, I'm basically quoting from your report.
Yeah.
What is the sense you're getting? The high prices have not gone away. As your own report says, even after the fall, steel prices are much higher than what they were, pre-COVID or even 2 years ago. Do you expect, first of all, give us what is the first half situation? How much lower than normal? And what is your reading of the second half?
Okay, sure. So if you look at the overall execution in the first half of the financial year, it is lower by about 13 to 15% when compared to the corresponding period for the previous year. Now, although in the road, the contracts, there are price escalation clauses in the agreement, as Mr. Vijay Kumar was also mentioning, because of the high surge and the volatility in the commodity prices, many of the developers have delayed the procurement of materials and have gone slow on the execution amidst this uncertainty, because of which the overall pace of execution has gone slow in the first quarter. But we expect now the pace of execution to ramp up quite sharply from Q3 post the monsoon season. So overall for the current financial year, if you look at our estimates are about 12,500 to 30,000 kilometers in terms of the overall execution.
Okay. How would you react to that, Mr. Vijay Kumar? What has been the awarding in September, October compared to the first 5 months? First 5 months, clearly, the numbers were, about 2,500 kilometers compared to over 3,000 kilometers a year ago. What is the performance in September, October?
You see, typically, the global uncertainties and the tail end of the pandemic effects are still dragging the industry in the quarter one. You see, out of something like 1,600 crores of projects, almost 1/4 of the projects are delayed. That is the kind of numbers we are talking, and the time overrun obviously results in cost overrun, and there is about 20% of the projects have been delayed. If you see the overall Indian infrastructure scenario, so this is basically what we feel. This emerges out of if you have tough competition, if you have an aggressive competition and aggressive bidding that happens, and if some of the players compromise on long-term perspective for short-term benefit, this will be the sideline clip.
I get that, Mr. Vijay Kumar. Can you tell me what has been the awarding trend in September, October? Is it better than the first 5 months?
I think we believe we are seeing a bit of improvement in the second quarter onwards because because of the more predictability in execution. I think we are seeing a little bit of improvement there.
Can you give any numbers?
I don't have the numbers right now, though. Means the government of India has released certain numbers.
Okay.
I don't have the numbers right now.
Got it. Rajeshwar, you are very confidently saying that the second half will be much better. And although only 3,335 kilometers were executed in April, August, you are expecting the full year to be much better.
Yes.
Are you seeing some early trends in September, October? And what are you basing this confidence on?
Yeah, so even if you look at historically and typically the way the construction activity goes on ground, in the second half, the construction activity picks up quite significantly post the monsoon season. Q3 and Q4 usually accounts for anywhere between 55 to 60% of the overall execution for any construction contractor. It could vary from segment to segment, but in road space, at least 55 to 60% of the overall execution happens in the second half of the year. In addition to that, as I was mentioning, because of the uncertainty around the commodity prices, deliberately, it's not about the lack of order backlog. Order backlog was adequate enough. The ministry is adequately funded. Despite that, because of this uncertainty, developers have deliberately gone slow. So now it should pick up because the orders are in hand, and at the same time, there are no funding challenges. And as I mentioned, H2 typically accounts for 60% of the overall execution. Sum total of all this should result in sharp improvement in the execution now.
Yes, but what Vijay Kumar is telling us is that input prices are still high, and there is severe competitive intensity which is leading to undercutting.
Yes.
And will that be major hurdles in the second half also? even if they do as projected, we are going to do only as good as last year, not better.
That's right. Yes, not better. Right. So yes, the competitive intensity has been quite high in this segment. See, what is happening is, if you look at the state governments, the overall fiscal bandwidth for a good number of states has been constrained, because of which the new project awards remain subdued. As a result of which, most of these developers are actually shifting towards central government funded projects, be it railways or roads and drinking water supply projects under Jal Jeevan mission. Consequently, what we are witnessing is the number of bidders who are participating in the road sector has shot up quite sharply. If you look at the last 6 to 8 quarters, on average, for each bid, there are about 35 to 40 bidders vying for these contracts, because of which we have seen that these bids were placed at about 30 to 35% discount to NHAI's base price. What this would result in is, if the discipline is not maintained by these road contractors from the overall credit perspective, it would have adverse impact on the profitability and could also result in challenges in working capital management. So that is one area where contractors should be very careful and cautious, because quoting at a substantial discount would hurt them in terms of the profitability, especially at a time when the commodity prices are at an elevated level.
Fair enough.
Now, the other point which I wanted to make is, in case of road contracts, when compared to some of the other segments, the price variation clauses are quite strongly worded, meaning some of these commodities, like for instance, bitumen, fuel, cement and steel, all these are linked with the respective commodities price movement, because of which to a large extent the variation in the price movement for these commodities should get passed on to NHA or MOTH. Only in cases of commodities where it is linked to a broad-based index, like for instance WPI or CPI, and not a specific commodity-related index, the impact on the contractors would be relatively higher, because there will not be one-to-one correlation between the movement in the commodity prices and these indices.
Okay, fair enough. Mr. Vijay Kumar, what has been the awarding by states? Has that been any better, or is it lower? Because at least when you get the overall fiscal numbers of the states, CapEx performance is pretty poor.
Correct. No, overall, if you see the CapEx performance is, as on the part of the government, not only road, on the whole infrastructure, if you see, there is a slight increase. If you see the quarter one CapEx by the central government, there is almost like 30-35% of increase in the expenditure. However, in respect of private CapEx, that is going down. It is not picking up to the extent of what it is required post-pandemic, or you call it as monsoons.
My specific question, Vijay Kumar, are states awarding less than they used to, say, 2-3 years ago, say before COVID?
Correct. This is because what I guess is the government is still watching the kind of uncertainty is what we are having right now.
Okay.
And
No, I'm not asking for the reason. I'm not asking for the reason, Vijay Kumar. I'm asking, is it a fact that states are awarding less? I just want to know the number of awards in the market, center and states.
Correct. What you're saying is right. These awards have substantially come down in the quarter one.
Okay. From the states as well.
From the states as well.
And it's not picked up. It's not picked up in September, October.
September, October, I think we are seeing a marginal improvement, I guess.
Okay.
Mainly, the state, as far as the states are concerned, the revenue consumption is increasing more. Unless otherwise the capex is not increasing.
Okay. Well, just a final quick question out of time, Rajeshwar. When you look at the date, budgetary allocation, this year it is same as last year for the for roads, and the extra budgetary resources don't seem to be there at all. So therefore, should we expect some kind of lesser performance than last year?
No, need not be. See, what is happening is, if you look at the NHA's debt levels, they have increased quite significantly over the last couple of years because of the Bharat Pariyojana program which they have launched. And the initial period was largely funded by the debt raise at NHA level. Now, if you look at the overall debt levels as of March 2022, I think it should be about 3.4 lakh crore. Considering this increase in debt levels, it's a deliberate attempt from the government of India that this year, the entire funding would happen through the budgetary allocation, not through IABR.
Got it.
That's the reason why they have not allowed additional borrowings for NHA. But even if you look at this 1.88 lakh crore, which got allocated in the current financial year, it should be sufficient for the current awards as well as the execution that is likely to happen on ground. It should not have any impact in terms of lack of funding should not be a challenge.
Got that. Got that. That's very, very positive. Thank you very much, Vijay Kumar and Rajeshwar, for enlightening us about the road sector. So awards are expected to pick up in the second half. A slight problem because of the rise in raw material prices and a certain hesitation on whether everything could get passed on. So a margin issue, but no problem with orders, at least not expected. Wrap up on Bazaar on that note. Chartbusters up next.